Hello, and welcome to the November Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. Once again, I can sit here and tell you we had a terrific month in the financial markets. U.S. markets were up between 2 and 4%. Around the world, developed markets were up about 1.5%. Emerging markets were up about 3.5%. Anywhere you look, companies are making money, stock markets are being positive, and the question is this going to continue? And if so, for how long? In a lot of respects, this actually looks kind of strange, particularly here in the U.S., because after all, it was only about a month ago that we had 3 of the worst storms in history hit us. And the damage was enormous, both in people terms and also in economic terms. And you would have thought that would have derailed the economy and potentially the markets. But in fact, it didn't. When we're looking at the economic data, we see consumers actually remain confident and actually have gotten more confident. We see business confidence up. And beyond that, we're also seeing both consumers and business actually match their good feelings with spending. That's something we haven't always seen in the past, but now we are indeed seeing that, and that's a very positive sign as well. When we look at the financial markets, what really matters is not just the economy, but also corporate earnings. And there, although there's some worrisome data in the headlines, the news is actually good as well. The worrisome data comes from the billions of dollars that insurance companies are going to have to pay out for hurricane damages. And because of that, profit growth has actually stepped down. But once you net that out, profit growth is actually beating expectations. Companies are not only making more money, they're making it faster than investors expected. And that explains a good deal of the market response. So with a solid economy and with a solid stock market, where do we go from here? There are actually some good signs. The Federal Reserve is looking to raise rates because they're confident in both the recovery and the financial markets. The rest of the world is actually growing, in some cases, faster than the U.S. And this is a relatively new development. Europe is growing very well. China is stabilized and growing. Even Japan is growing for the first time in really decades. Now, this has been a headwind for the world economy and for the U.S. economy for the past several years. So to see all of these countries growing in conjunction with the U.S., that can only help. Not only here, but abroad. Are there things to worry about? Of course there are. Politics remains a concern. Europe, in particular, with the confrontation in Catalonia, had some issues to deal with. Here in the U.S., we have real questions over whether the tax reform package is going to get through. So there certainly are political risks, but at the same time, with the fundamentals sound, and with all the indicators that that's likely to continue, the signs looking forward remain pretty good. That said, we'll see what happens, and I'll talk to you next month. Thanks for watching.